This is a trade I took this week that was a little outside my usual territory. It was on Tesla. I don't trade stocks often. My world is mostly Forex and crypto, but the setup showed up and it was too clean to ignore. One trade, long, almost $3,500 in profit. Let me walk you through it. This time I'm focused on Tesla and the first 4-hour candle of the day. That is the candle that opened 4 hours before New York stock market, usually around 9:30 a.m. Just like I do with Euro USD and Bitcoin, I start with the same framework regardless of which instrument I'm trading. I took the first 4-hour candle, the high and the low, and made note of them. Tesla price did some up and down movement, but then it made a major move downward, breaking below the range low and closing below it with a full body candle. That is the first part of the sequence. Now I just had to wait. The next candle closed back above the range low, and that is when I took my longs. This was just a classic liquidity sweep of the previous range low. When I traded that day, I had added the VWAP, which is the volume weighted average price, along with the 5-minute chart. VWAP informs me of the average price a stock has traded at during the trading day, while also taking price volume into account. So when price is currently trading above the VWAP, the majority of the day's trading volume of transactions have taken place at a lower price. Therefore, the buyers who have bought shares during the day are still sitting on a profit. This indicates a bullish environment. But when the price is below VWAP, it is an indication of a bearish environment. So I checked the VWAP and found that the price was above VWAP, confirming my bullish trade. Then I looked at the MACD. It was also positive and had bullish momentum. I had 3 things telling me the same information at the same time: the 4-hour range setup, the VWAP, and the MACD. All 3 were aligned. Now, because this was Tesla and not a market I trade every day, I kept my size smaller than usual. That was a deliberate decision. When you're in unfamiliar territory, you don't go full size. You take the trade, you prove that the setup works on the instrument, and then you scale up over time and you build confidence in how it moves and how it trades at certain price levels. I wasn't going to let the quality of the setup push me into sizing up on something I don't regularly trade. So my entry went in on the close back inside the range, stop loss at the low of the breakout candle, take profit at 2 hours as always. Everything placed, everything set. I stepped back and Tesla just moved smoothly and steadily. No erratic wicks, no sharp reversals trying to shake me out, just clean movement upward. Each candle, as you can see, closed higher than the last. This was some very nice price action. So it hit my 2-hour target and I closed up nearly $3,500 from a stock I almost didn't look at this day. One trade, 3 confluences, a bit smaller size but still clean profit. And of course, as always, these results are not typical. So let's chat about having confluence. Most traders base their decisions off one piece of information, one indicator or one price pattern, one level, etc. Sometimes that's okay, but when you can find several independent pieces of information pointing in the same direction, the VWAP, the range setup, and the MACD, then each of these independent pieces give you a piece of information telling you the same thing. And every one of these pieces of information are calculated differently and measures different things. So if you're trading stocks, you will want to really understand VWAP, or the volume weighted average price. VWAP is more than just a line on the chart. VWAP is used as a benchmark by professional traders. Institutions use it as well to measure their activity. It's also used by equity market makers to assess market conditions. When price is above VWAP, this means the bias is confirming buying, bullish, during that session. But if price is below, the opposite is true. My decision to size down today was due to being in the stock market. I don't regularly trade stocks, but I do trade them from time to time, especially when the setup is clean as it was today. What needs to be distinguished is that there's a difference between the quality of a trade setup and understanding how the underlying instrument trades, or how the instrument moves or reacts to price levels. An example would be that Tesla trades differently than Euro USD. The spreads are different, the volatility profile is different, the way the price reacts at certain levels is different. You're being smart for sizing down because you don't know how the underlying will react, not providing yourself with an opportunity to potentially lose a large amount of money. Now, if you're looking for a platform to trade on, I recommend Exness. The link will be down below. The executions are clean, it's a solid platform, and you can start with as little as $10. As I said, it will be down below in the description or in the pinned comment if you want to check it out.